goal of asset allocation is to ensure that our investment mandates are optimally positioned from a diversification perspective to deliver best-in-class, risk-adjusted returns. As part of this mission, we monitor portfolio resilience capacity in relation to global trends. We adopt a forward-looking approach, anticipating external risk factors, and we use a comparative approach, assessing market competitiveness in relation to each other. Accelerating financial inclusion is becoming a global trend in emerging and frontier markets. It is a trend that investors need to take into account when making debt investment decisions in these markets. So 2017 saw emerging markets return to investors' favor after the crisis that resulted from the 2014-2016 commodity price slump. With rising US rates, they now find themselves in a catch-22 situation between the necessity to remain attractive to debt investors and avoid capital flights, and the need to maintain expansionary policies that are key to support economic domestic growth. At one end of the spectrum, the most diversified emerging economies with strong political and economic governance institutions will have the most resources to remain competitive and retain foreign capital. At the other end, emerging economies still heavily dependent on natural resource extraction with deteriorated financial situation will likely suffer. In between, you'll find most countries with increased debt-public ratios, but willing to take all necessary reforms to improve their competitiveness. For these countries, financial inclusion measures represent a third option that strengthen the growth opportunity argument in the investment rationale. Country debt profiles have become less of a differentiating factor in strategic allocation due to increased debt ratios over the past 3 years to compensate losses in investment and revenues. In our process, we screen financial profiles, but we also assess investing fundamentals such as credit information transparency, remittance volumes and stability, and foreign investment regulation. Currently, we favor countries accelerating financial inclusion and structural reforms that improve investment fundamentals.